Welcome to another exciting episode of The Trading Bell. This week on the program, we shall be speaking to the CFO at KCB, and that is Lawrence Kimathi. He'll be talking to us about the NBK acquisition by KCB, as well as what does this mean for the bank and for the shareholders at the end of the day. But first, let's take a look at Lawrence's profile.
Lawrence Kiambi has over 15 years progressive experience in finance at senior and executive levels across many countries in various organizations. He joined the bank in May 2015. Kiambi's immediate posting was East Africa Breweries Limited, where he was the Group Supply Finance Director, responsible for 10 legal entities across 6 countries. He previously worked at AIG Property and Casualty General Insurance as the Chief Finance Officer. Prior to that, he worked at British American Tobacco, BAT, United Kingdom and Kenya in various senior capacities. He has also worked at Cadbury Limited East Africa and Central Africa, Kenya as the Finance and IT Director. He holds a Bachelor of Science in Accounting from the United States International University of Africa and is a Certified Public Accountant of Kenya.
Thank you so much for joining us, Lawrence. Such a pleasure to have you on the show.
Asante sana, thank you.
All right, and of course, KCB is no stranger to many of our viewers as well as to many Kenyans. It's one of the largest banks in East Africa. The bank has been growing in size and in customer numbers. And lately, we've seen KCB taking on a big brother role to National Bank of Kenya. National Bank right now being acquired by KCB. Perhaps walk us through the assessment of how the acquisition has been faring so far, and what should the customers expect?
Thank you. It's good you use those words of big brother. Yes, we have played that role in the market as I think as a market leader you're expected to show leadership. So when Chase Bank was in distress, we came up and we played that role. For NBK, the status at the moment is that the offer period is open. It's actually closing at the end of this week, and I'm not at liberty to discuss the status because the law does not allow me to talk about how many shareholders have accepted so far. All I can say is that the progress is good, and I would urge shareholders, especially the retail shareholders who have not exercised their right by signing on the acceptance form, to do so before the end of this week, because we shall not be extending the offer. All they need to do is just sign on the form that was sent to them. If they don't have the form, they can visit any KCB branch or their stockbroker, and they will get the form and they execute by Friday.
Perhaps will this change the share price? Because I know KCB is valued at a certain market rate as well as NBK. And what do the shareholders stand to gain out of this share swap? And give us a practical example.
So what we did was the share swap there's a ratio which is 1:10. So for every 10 NBK shares, you'll get 1 of KCB. The day we announced the shares, the takeover, what we normally don't use a spot rate. Spot rate means the price trading today. You normally you'd value a listed entity based on what we call a volume weighted average price for the last 6 months, because it removes any events that might have happened and caused the share price to change drastically in one day. So you take an average for a period of time. That is much better representation. So the viewer price for KCB the day we announced was about 44. The viewer price for NBK on the day we announced was about 4 shillings 50 cents. So basically it's almost the same price, because when you do a 1-for-10, because 4 shillings 50 cents is almost 10% of 44 shillings. So there isn't too much loss in terms of the price to the NBK shareholder. That's one. Two, if you look at the history of NBK KCB the last 5 years, from a total shareholder return point of view, which is a combination of the dividends we pay plus the capital appreciation of the price, you know, KCB is way up there in the market. We moved paying dividends from 2 shillings a share in 2015. The last dividend we paid was 3 shillings and 50 cents, almost double in 2018 results. Our price has moved from an average of about 28 to about 44. So you can see, you know, it's been moving in the right direction as if you invested in KCB. NBK, on the other hand, has been going unfortunately the wrong direction. So if you're a shareholder of NBK and you're being given opportunity to be a shareholder of KCB, I think it's a very sweet deal. You're investing in, you're becoming a shareholder in a bank that has consistently performed, as you said, the largest in Eastern Central Africa, gives the shareholders back their money when we don't need it by way of dividends. So, you know, we've just announced an interim dividend that is payable at the end of the year based on our half-year results. So you'd get a dividend immediately.
Speaking about a sweet deal, Lawrence, of course, how many shares are we looking at in this entire process by the close of trading?
So if 100% of the NBK shareholders participate and accept to swap their shares, then we're looking at issuing, I think it's about 147 million shares, new KCB shares. So our the number of issued shares will rise from about 3 billion to about 3.2 billion once the deal closes.
All right. And Lawrence, you sit at a very vantage point, and being head of finance, and we are seeing a new trend in the market where there's quote-unquote a small revolution happening in the banking sector when you look at consolidation. We've seen Equity acquiring some banks outside the country, KCB taking that route as well, and just to name but a few. Perhaps, is this eventually what the central bank has been advocating for? Because I remember having an interview with the governor, Dr. Patrick Njoroge, and he did say that we are sort of overbanked as an economy, over 40 banks serving a population of 45 million. If you do the math, it translates to about, for every 1 million Kenyans, there's a bank for you.
Absolutely.
I don't know, what are your thoughts on this?
A very good question. In fact, there was a report that was done by the World Bank a few years back and ranked Kenya as one of the highest bank per capita nations in the world. So the governor is spot on in terms of saying we are overbanked. If you look at economies like Nigeria, South Africa, they tend to have not more than 10, Nigeria maybe 10 banks, very strong banks, and many other smaller ones. South Africa, 6 major banks, and South Africa economy is massive. And then you've got smaller ones. So I think this is the right route for our economy: consolidation, getting fewer bigger banks. And I know a lot of people worry when they hear fewer bigger banks because they think then they will form a cartel and
price fixing
and price fix, and it doesn't work to the advantage of the customer, which I think is contrary. When you have fewer bigger banks, then competition becomes about customer experience and not about pricing, because you as a customer, you vote with your feet. If we don't treat you well, you know, there's another big bank where you know your money is still safe. You will still, you know, get your money back, and you know they treat you much better. So I think that's the view I would look at it, and it's something very encouraging.
All right. And Lawrence, you're the man behind the numbers. Today you're in front of the cameras, and of course, looking at this acquisition, what will it mean to the balance sheet of KCB now that you're seeing there's a lot of shift towards digital banking, as well as trying to reach the diaspora market?
So this acquisition for us is a step closer to getting to the 1 trillion shilling balance sheet, with the first one in this part of Africa to get there. It will accelerate our momentum. The second part is, you know, as you rightfully said, just the digitization of the banking experience. it offers customers opportunity to interact with the banking services without necessarily having to come to the banking hall. So you can decide to do your transaction at the comfort of your home, your office, in the matatu. You make transactions where as you're traveling. So when you combine those two, we see opportunity for a much more faster growth, because this transaction raises our base. So we moves our base by almost $1 billion upwards. So if you grow by 10% of a higher base, then it's an exponential growth, and you get to your targets much faster.
Speaking about this acquisition, of course, it's going to be a big game changer for KCB. But at the end of the day, you're also inheriting some toxic financial books from NBK. When you look at their balance sheets, I was just analyzing some of their numbers. You see, it's not all rosy. I don't know, from your experience in finance, and now that KCB is making this strategic acquisition, as you rightly put it, what are some of the inherent risks now that you're seeing a bank that was literally in turmoil? They are having a very high non-performing loans. There's also quite a number of issues that had bedeviled this particular bank. How do you anticipate to handle these issues as you conclude this acquisition?
Yeah, so you're right. The level of NPLs in NBK actually much higher than industry. Industry average is about 12%.
Yeah,
they've been sitting on close to 50%. If you analyze their financial statements the last 5 years, you'll realize that from a total income point of view, NBK has actually been growing slowly, but not declining total income. There are years where they've made losses, and the reason they've made losses is because of taking provisions for, as you said, the toxic,
the bad debts,
and the NPLs, which in itself is a good thing, because it means that they've taken the appropriate levels of provisioning to be able to cover themselves. So we saw three things. One, the deposit franchise that they have, sitting on almost $1 billion of very good deposits that we can utilize. They are not utilizing them effectively right now because they're undercapitalized. Second element we looked at is obviously the opportunity to write better quality loans, because we'll bring in capital. And the third one is actually a point you touched on, because of digitization. Our customers at KCB right now have a wide array of products available to them.
Sure.
The NBK customers do not necessarily have that. So when there's a measure we have, which is we call product per customer, try to get you as our customer to interact with at least 3 of our products and not 1. So our ratio is much higher than theirs. The higher the ratio, the more income you generate. So that's the third one that we identified, and obviously synergies eventually that will come out of cost rationalization. All
right, and allow me to put you on the spot a bit, Lawrence. Being the captain of this strategic acquisition, of course, what is your overall assessment of the asset quality in question right now?
I think the overall assessment of the asset quality has actually been addressed by the price we offered. So when we did a valuation, we took into account the fact that there's a sizable amount of their asset that is not performing and has not been fully impaired. So we took that into the price that we gave, and maybe that's where the conversation about underpricing in the market is coming from. Although our other shareholders seem to think we are paying a bit too much for it. So it's a balance of trying to ensure that valuation is, it's like, I'm an accountant by profession.
Sure.
I always joke that you give an accountant 10 accountants the same figures, they'll give you 10 different results. So it's similar to valuation. It's a range that you operate at. You'll never get the actual real value.
Sure.
Yes.
And of course, there's that talk of you being exempted from paying tax, and of course, we wouldn't want to preempt what the courts will determine, but Ideally, Treasury had a noble thought around this particular acquisition. And if this stays, how will it sort of define the next phase?
So we haven't actually applied for a tax waiver ourselves. There's another merger that is happening in the country at the moment. I think that's where the issue about the waivers come from. But just as a principle, the waiver on tax is usually something that happens in such transactions. Many other transactions that have happened before have gotten waivers. It's a waiver on stamp duty.
Sure.
It's combination of two companies coming together, so does not really in itself generate a taxable opportunity, and that's why that part of the law is actually given to the Treasury for them to do an assessment and make a decision at their discretion whether to waive it. So it has happened many other transactions in the past. It's obviously become quite topical. It's a matter that is in court at the moment, so maybe I shouldn't talk too much about it.
That's true.
Yes.
All right. And Lawrence, as we come to the tail end of our discussion, and many of the customers, of course, are also trying to grapple with the fact that NBK has its colors, their logos. So what will change after the acquisition is done and dusted? Are we going to see a rebrand? Are we going to maintain the branches as they are? What is the overall plan?
So we've set up an integration team because you know, the acquisition is one part. Is that just the beginning? You identify a good asset, make the acquisition, buy it. The proof of the pudding in terms of the success comes from the integration. A lot of mergers and acquisitions actually fail to achieve their results because of the integration. We've set up a very good integration team. They go in there day one. Once you know the transaction closes, they will evaluate. We are giving ourselves 18 to 24 months for full integration, which will mean you know, moving all the banking business of NBK into the KCB Bank Kenya, which is a subsidiary of KCB Group.
KCB Group. And of course, now that we are seeing the financial sector deepening has been sort of gaining traction. There's a lot of appetite in the market for different products. What are the low-hanging fruits that you foresee after this acquisition, and of course the road ahead?
Yeah. So one of the you know, low-hanging fruits we've already touched on is digitization. Just getting customers to interact with our products in as frictionless as possible, for them to, you know, they don't have to come and queue at the branches. So, you know, a few years ago, we started the agency banking model. It has really gained a lot of traction. What it does is, the customer does not need to incur costs to come to a bank. We've brought the branch closer to you, and you can do your, more
convenience.
A lot more convenience. It saves you the cost you would have incurred to get there, and secondly, the time it would have taken for you to come and interact in our banks.
All right. And Lawrence, it would be a travesty for me to finish this interview without asking you about regional plans, especially now that there's a lot of hype in Ethiopia, and KCB has been taking on the frontier markets.
Yes.
Perhaps, what's your sentiment about Ethiopia, even as we conclude this interview?
So Ethiopia is a very attractive market, obviously, not just for us, for a lot of people internationally. The population, you know, over 100 million people, fast-growing economy, consistently growing over the last number of years. We opened a rep office there 3 years ago. For the financial sector, it's still close to international banks, international players. I saw in the paper the other day, there was an article about them taking the first step to open on the leasing. They allowed an American company to come in to do leasing. That was always open. So our conversations with the Minister of Finance there, the central bank governor there, they had always said, if you want to come and do leasing, that we allow. But banking itself, not yet.
Okay.
We are very positive and confident that they will open it up in a very short period of time. I think you know, 2 to 3 years is actually on the extreme of how long it will take, and we are ready to get in there.
All right. So are you in the process of getting your license? Have you applied?
We can't apply for a license at the moment because they don't allow that.
Okay.
What we've done is opened a representative office.
All right.
We understand in the market. A rep office basically is like a sales office. It can't do any banking. It just, you know, you create awareness of who KCB is. The relationship between Kenya and Ethiopia has always been very healthy. We're actually one of the very few countries in the world who do not require a visa. And vice versa, they don't require a visa to come here because of the relationship that was set a long time ago by their founding fathers. So we believe that in itself will actually sit very well when they open up the market for Kenyan banks to get in.
All right.
Yes.
Many thanks, Lawrence, for your time and, of course, for your great insights into the banking sector.
Thank you very much.
Looking forward to visiting you guys once this acquisition is done.
Absolutely.
And just to see how the bank is taking on this new, should I say, small brother into the fold.
We'll be happy to talk to you.
All right.
Thank you.
Well, we've been speaking there to Lawrence Kimathi, the CFO at KCB Group, just breaking it down for us what this acquisition by the bank and National Bank of Kenya means for them, and of course giving us a lot of insights, especially when it comes to customers. What should they expect even as this process comes to a conclusion? Well, with that, that's where we wrap up. Actually, that's where we wrap up our show this particular day, and we do hope to see you next week, same time.